20%. So the financial overview, so the financial aspect of the case, it dominates the US banking industry with a 41.4% market share, strengthening position by leveraging sizes, diverse business portfolios, and financial robustness. It boosts over $2.6 billion in assets, with sales approaching $100 billion in 2017 and a net income of $24.4 billion. So it focuses on technology investment, rapid stock buybacks, and global expansion to capitalize on growth and opportunities. So the computer analysis, JP Morgan Chase led the US banking industry with 14% market share and over $2.6 trillion in assets. It achieved nearly $100 billion in revenue and $24.4 billion in net income in 2017, surpassing competitors. So it focuses on technology investment, stock buybacks, and global expansion to capitalize on growth opportunities. In my next teammate to talk on the
so there's just the financial analysis for the because all the change within those 2 years, right? It's this one is the income statement and this is the financial statement. Now moving on, there will be a SWOT analysis by my team member over here.
Let's go.
This highlights JP Morgan Chase's strength as they hold a 13% market share in the banking industry with assets over $2.6 trillion and revenue near $100 billion in 2017. It also emphasizes their diverse service in investment banking, commercial banking, and asset management. However, they face weaknesses including a net income decline and mixed divisional performances and challenges such as increased regulatory costs, brand overlap, and cybersecurity risks. In the realm of opportunities, the company aims to increase online transactions by 10% and credit card sales volume by 15%. They plan to acquire 3 smaller online banks, open new branches, and 10% increase in commercial and industrial loan balances. Some of the threats they face include data breaches, threatening customer trust. Additionally, interest rate fluctuations, geopolitical events, market volatility, and technological innovations challenge traditional banking models. Turning to the internal factor evaluation, IFE, several critical strengths have been identified. JP Morgan Chase ranking first in industry market share with about 14%. This strength is rated a weighted score of 0.28, indicating a superior advantage. The high rating reflects the significant impact of market share on their competitive position, allowing it to exert more significant influence on the market and provide a solid base for revenue and growth. Their total asset and revenue shows a strong financial health, supporting a strategic investment and economic resilience. The IFA analysis highlights the significant weaknesses. The cost of adhering to regulations like the Dodd-Frank Act impact the company's profitability, indicating a significant impact on the bottom line. And additionally, regulatory changes, especially during the Trump administration's present uncertainty, affecting strategic planning, emphasizing the need for JP Morgan Chase to be adaptable and minimize disruption. We witness a balanced scorecard that reflects a robust financial performance. The overall IFA score of 3.17 shows a strength outweighing its weaknesses, demonstrating a solid internal strategic structure. Within the EFE metrics, we've determined pivotal opportunities. Online banking banking growth. JP Morgan Chase plans to increase performances for online banking by 10% in online transactions within the next year. This opportunity is rated 3 with rating score of 0.24, reflecting confidence in the bank's digital strategy. And critical card sales volume increase. The bank targeting a 3% increase in credit card sales volume, indicating a positive realistic outlook of on capturing additional market share in the credit card segment. Moving on to AFA threats. The high rating of number 7, technological innovation, is strengthening traditional banking models, emphasize the severe impact that cybersecurity incidents can have on customer trust and the bank's operational integrity, highlighting the essential need for robust cybersecurity measures in the digital age. And the high rating of JP Morgan Chase International Operation exposed to geopolitical risk, number 9, signifies the substantial risk posed by geopolitical events and regulatory changes on global operations, stressing the importance of strategic flexibility and risk management in international business. The EFS analysis indicated of 3.19. This showcases the bank's strategic focus on seizing opportunities and addressing risks, highlighted by efforts in cybersecurity and regulatory fee management, illustrating its adaptability to external challenges. Next, my friend explains the panel.
So, Rufus, now we'll be looking on, moving on to CPM analysis, which is, these are the 12 critical factors we took to compare the competitors for JP Morgan, which is JP Morgan, Bank of America, and Wells Fargo. The comparison of critical factors among the JP Morgan, Bank of America, and Wells Fargo provides a valuable insight into their competitive position. JP Morgan demonstrates a strong overall performance, scoring highest amongst the institution within the total score of 3.80. Notably, JP Morgan excels in financial performance, market presence, and innovation, leveraging in robust financial extensive market research. And moving forward to Bank of America follows closely behind with a total score of 3, showing the strengths in areas such as employee engagement, product offerings, and regulatory compliances. And talking about Wells Fargo, then sorry, Professor. Yeah, however, it lags. However, it slightly lags in the financial performance and the market presence compared to JP Morgan. Wells Fargo trails behind a score of 3.20. Right. Overall, the analysis highlights the JP Morgan's leadership position in the industry. Now, moving on to the analysis, that will be our second stage, which will include BCG matrix first. BCG matrix, as we saw in the previous teams, BCG matrix, it was way different than what we have predicted. Over here, these are in the second column. We have the our firm's revenue, which is it's our firm's revenue, and in this third column, it's the top industries revenue, and the fourth one is the growth rate of the market growth rate in the industry, right? Which after entering the values, we got this result, which you can see right now in the BCG image, in which we saw. We are seeing that commercial is actually in the question mark section, which tells us that whether we should continue with, or like we should invest more in commercial, or whether we should continue and hold and maintain, right? For as you can see over here, like community and consumer and community banking and corporate and investment banking, they are the star of the JP Morgan, as they are providing cash, good revenue for the company, and at the same time it's kind of growing in the market also, right? So this was the whole BCG matrix. Now coming next to IP matrix analysis, right? So as you can see over here that as you can see over here that the two of our divisions, which is consumer and community banking and corporate and investment banking, they are towards the strongest side of the IE matrix. So based on the analysis we did, so for consumer and community banking with IFE and EFE scored 3.7 and 3.2, which will give us the, respectively, this division falls into a grow and build segment. Thank you. So, yeah, so it will, the community banking and the corporate investment banking, they both are lying in grow and build segment. Whereas if you see asset and wealth management and commercial banking, they lag a little and they are not providing that much of revenue. So, and their score is for commercial banking, it is 2 on both IFE and EFE. And for asset and wealth management, it is 2.8 and 2.6 respectively. So they both lie under hold and maintain segment for IFE matrix analysis, right? Now moving on for the next one, which is space matrix analysis. Now there were many factors which were considered while analyzing all these things. For example, we have considered financial stability, industrial positioning, then competitive positioning and stability positioning also of the whole space. I know, Professor, I might be wrong somewhere, but after the analysis, we got that all the three banks are actually performing aggressively. JP Morgan is a little less than what we expected from the competitors, but at the same time, what we suggest for JP Morgan is to perform more aggressively to achieve and grow in this industry. Now, the next matrix is Grand Strategy Matrix, which will be.
Thank you, Milan. So, Grand Strategy Matrix basically gives us the idea about how all the divisions of the company is doing in the corporate paper, the same thing in the market growth paper. So, if you can see the divisions over here, the consumer and community banking is in a very strong competition, but however, the market growth rate for this particular division is not that good. It's most of them in the very lower segment. But the corporate and investment banking, however, is mostly in the strong competition part, and the market growth is very high for that. But so the below down part is the commercial banking because it's not doing that much of a good in the competition, and same time the growth rate is not that much feasible there. However, the asset and wealth management is in between. Somehow it's a moderate. So let's see gradually and slowly what solution that we can bring up. So now, if we want to look into the S4 strategies, that how the company's strength has been multiplied with the opportunities and threats, we can see there are multiple options in front of us at this point. So some of the top that I will share with you guys would be for the ASOs are that currently the online transactions are getting pretty much hyped up for them. They want to get out from the traditional practices as well. So they are thinking about that by 10% of the next year, they might continue moving their practices to the online lending purposes as well. And at the same time, they have a huge plan for opening 400 new branches. As for that, over the next 5 years, they want to capitalize on the global presence as well. For the AC strategies, where we want to more put focus on is that they are having a big diversified portfolio at this point. So to make sure that their portfolio is not getting much of the unethical segment and all, they want to monitor and address any potential misconduct that can be happening by the employees, and they can control it well kind of ahead. And also the banking sector, cyber security is a very important thing because information of the clients is very hard and delicate to handle. So for that, they are putting much more severe measures on into look into. Now, if we want to go and focus on the WO strategies and WT strategies, however, we know that weaknesses can be utilized as your strength if you can control it ahead. So some of the cases that we want to focus on the strategy part for WO would be that JP Morgan currently is aiming for 10% increase in the commercial and industrial loan, balancing that 8% of the portfolio growth should reduce down in the reliance on the legacy system at this point. So they want to move forward their attention to more maintenance and litigation part. And at the same time, that Dodd-Frank deregulation that is been happening, which has been shared by my previous team members, for that they are planning to put on a 15% reduction in the regulatory fees, which will help them to put their next fiscal year deregulation in a more less cost effective of a point of view. As for the strategy part, the focus that we want to put into is that they have these brands weaknesses, however, it's becoming the overlapping because of the JP Morgan and the Chase. So we feel that they should have a streamlined measurement in this point so that each brand can be focused more prominently rather than having some overlapping, and the transparency is very much cleared up at this point. And also the internal fraud part, they can mitigate it very easily if there is any sort of upgraded innovations coming up from their side. So this the EBS EBRD portion that we want to look into. However, moving forward to it, we want to take to the QSPM part. So my next team member will be guiding you through it.
Hello everyone. Now I'm going to guide you through the QSPM analysis of our analysis on JP Morgan. So based on before we go further into the QSPM, we have come up with two strategic alternatives, which we believe is essential for JP Morgan to maintain its strong stranglehold on the market. The first one is DECE, or Digital Expansion and Cybersecurity Enhancement, where JP Morgan would focus on expanding its online banking services and significantly investing in cybersecurity to protect against cybersecurity threats. And the next one is global market penetration and diversification, which would witness JP Morgan try to increase its global presence through strategic acquisitions and diversify offerings that help it reduce its reliance on the traditional banking sectors. Now, as you can see in the QSPM analysis on the strength and weaknesses part, the significant market share, 14%, that JP Morgan enjoys, and also a robust financial performance, which is almost nearing 100 billion of revenue generated in 2017, ensures that JP Morgan has the capacity to expand along its global expansion paths. And this is mostly similar for both the DEC strategy and also the GMPD strategy. In terms of the weakness, the primary weakness that comes up to mind is the regulatory cost and the need to adhere to it. And in this case, JP Morgan, the GMPD strategy poses significant concern for JP Morgan. In the next part, in the opportunities and threat part, JP Morgan has witnessed significant opportunity to grow in the credit card industry market, as well as bring forward its online banking growth strategies. And in terms of the threats, the chief threat that JP Morgan should be concerned about is the cybersecurity and its in fluctuations with the economic conditions that are present in the market. Now, let's get deeper into the strategies that we have come up with. So based on our strategies, we have seen that the matrices suggest that JP Morgan's key primary money makers are its community and consumer banking, as well as corporate and corporate banking. So there is a heavy emphasis on online capitalizing on the current trend of digital banking, which is emphasized by the rating of 4 with a weight of 0.05 on technological investment, as well as commitment to digitalization is necessary for the expansion of online banking, which is currently a key strength of JP Morgan's current operations. Moving on, the presence of strong financial position and competitive advantage provides JP Morgan with a solid foundation of implementing the DEC strategy. And although it requires substantial investment, we believe that JP Morgan has the capacity to go forward with this strategy and leverage its inner strengths and external opportunities to increase its profit margins. Moving on, there are two key two star segments and one question mark segment in JP Morgan's current inventory, which suggests that there is a high growth potential and high market attractiveness. However, this can be done with heavy technological investment and the need to protect the customer security, data security, which is necessary for maintaining JP Morgan's current reputation, and also give it a competitive edge because the financial industry is very competitive, as we have found out. Moving on to the global marketing and penetrative diversification. Sure. So, JP Morgan, as we have discussed earlier, has a very strong market share and financial performance, and it is operating currently in 60 plus countries and has a strong brand recognition. However, in the case there was mentioned that there are certain cities where JP Morgan lacks presence, which are currently very lucrative, and it makes sense for JP Morgan to make sure that it attacks those markets and gets an edge in a very highly competitive banking industry. So we believe that this global marketing and penetration and diversification strategy would help JP Morgan if it follows its current trajectory of aggressive growing and growth and building segmentation related to its top two segments, which are the consumer and community, as well as the corporate and investment banking sector. So based on this positioning, based on the positioning in the BCG metrics, we can understand that the star segments, which are the two I just mentioned, have a significant growing potential, and it is also aligning with JP Morgan's current strategies, which is high growth and building strategy. Furthermore, JP Morgan has also been able to continue repurchasing its stocks, which ensures that, implies that its investors have a high. The company believes that its stock is currently undervalued and has the potential to rise in price. So, based on these understandings, we can confidently say that if JP Morgan Chase moves forward with the its expansion strategy, it might be able to find much more joy with diversification through acquisition, new product development, and branch expansion in growth markets, or like new cities, as is mentioned in the case, optimize its global operations, and most importantly, manage risk and compliance with the current regulatory changes, which presents a key threat to the operation of not only JP Morgan but also other banks in the industry. In general, we believe that the GMPD strategy will follow the market development and related diversification strategy, and this will be implemented alongside but not before the DECE strategy, which would be implemented firstly. As you can see, it's going to be a continuous process through the quarter one of 2018, and will follow along to the regulatory compliance and risk management space in quarter 3 and 4. And with strategically timed strategic acquisitions and partnerships with fintech organizations in order to enhance JP Morgan's portfolio, we believe that a simultaneous but staggered implementation of the GMPD plan, which would come into place mostly during the quarter 2 and quarter 3 of 2018, and would see or is forecasted to oversee new product development in quarter 3 and quarter 4, and hopefully enhance the risk management factor of JP Morgan by ensuring compliance as well as gaining an early mover or sort of a market leading position in the new market that JP Morgan needs to reach, will be a great way to move forward. With that, I think we are done and we are open to questions. If you have any. Yeah.
Thank you. So let financial ratio analysis. Do you do that?
Ratio.
It's there in the Excel.
Sorry, it's
We
in
have
the.
not put it in the PPT.
Yes.
Yeah, send this out to me.
Sure, Professor.
Let's go back. I want to see your PS here. Okay.
Yes, sir.
So why did you say only a few of your?
So, Professor, these are the major strengths and the weaknesses which we consider for the DECE and GMPD. See, these are the major strengths, weaknesses, threats, and opportunities. And on basis of those strengths, weakness, threats, and opportunities, we have worked on these two strategies, Professor.
Brand overlap, what does that mean?
So, Professor, JP Morgan Chase has two distinguishable brand. However, the operation often overlaps in terms of there's not a clear distinction between the revenue, and the revenue and the operation between the two. So, in terms of making an analysis for and coming up with a strategy, it's often difficult for strategists to sort of distinguish between the impact of each brand or each entity's to separately.
The reason I ask you that question is that, so
That's
why is
right.
brand overlap as a 3 year and it's 1 year? That's where actually we are going.
Professor, these are the two strategies based on that the overlapping portion has been segmented.
Because I'm looking at this, you want to the GMPD.
Yes,
If I understand it, it's to
the global market,
the global market.
Yeah.
development, basically.
JP Morgan brand should be able to sell everywhere in the world, and I think it's actually good for this because maybe in some markets Chase is going to be great, in another
Yeah.
market JP Morgan is going to be great. So that's what I'm wondering. I just want the justification for that particular line. Why is it 3 year and it's 1 year? That's my
So,
question.
Professor, can I explain it to you?
Please, thank
So,
you.
for the GMPD part, basically what happens is that when I was describing the W and WT as well, these are the two sister-based companies, JP Morgan and the Chase. So, what happens is whenever you go to the market development part, somehow the whole operation, the whole financial statements, their whole securitical incidents and everything somehow overlaps with each other. So for that, development part is much more lesser to grasp or to handle it up. But however, when it comes to digital security, the digital expansion, the cybersecurity purpose, it's more emphasis on that portion as well. Because these two has to be clearly defined, otherwise it actually overlaps. And even though they are doing excellent on the market at this point, but however, in the long run, competitors is already way ahead. As you've seen that they are already in the aggressive mode compared to JP Morgan itself at this point. So we have been distinguishing the whole portion as that for them based on the strategies.
Okay. Let's go back to your
What?
IFE and EFE. So, for the speakers, so
Professor, in the sixth point we have mentioned that JP Morgan Chase operates under two principal brands, JP Morgan and Chase, both of which enjoy the strong brand recognition. That's their strengths, we agree, but however, this also has that capacity of overlapping and creating.
I understand that. It's just that my challenge is I don't know why I'm not seeing any of these, some of these in your QSPM. That's what I'm struggling with. I understand what you say. Yeah, I see, I didn't push back. But I'm saying, for instance, we say you have a total asset of $2.6 trillion, revenue nearing $100 billion. Why is that not in your QSPM? Because those strategies that you're recommending, they need money. This is something that said they had money. Strong wide range offering, investment banking, commercial banking. Why is that not there? JP Morgan is a successful acquisition. Now this is something that I think I'm not sure Tim Wong mentioned this. This is a very good point. There in history.
Professor,
mentioned
those
in
are
the
there.
early-
I think on the second slide, if we can go through.
Go to the QSPM.
No, it's not in the
Go to the QSPM.
QSPM.
Let's go to the QSPM.
Yes.
So, Professor, the strengths which you have mentioned.
Next slide.
Okay. So
Professor, we have just given one word or two words for all the strengths which we have used. But when you will see in the Excel, the strengths which you mentioned right now, in that we have already,
Yeah.
given the ratings for the strategies, Professor.
Okay, let me see. Okay, let me try to see the KSPM. Because again, that strong acquisition
Yes.
tendency probably plays more into GMPD
yes.
than into DECA.
DECA.
JP Morgan Chase became JP Morgan Chase by
Through
acquiring it.
acquisition.
You mentioned it, and you showed it in your IFE, but I'm not seeing it in your QSPM. I think that for me is the biggest drawback. But maybe if you see, when you send your QSPM to me, maybe I will see.
Yes,
this,
yes,
Professor, one of the reasons I think we came up with this is because we were thinking more of the consumer and community banking, which is nearing market almost saturation at this point, because the market growth is JP Morgan has a really competitive position in that segment. However, the market growth is not that rapid, should we say, as compared to the corporate and investment banking. So in that case, the thing that you say, Professor, it's like a strategic, and there was also one portion mentioned in the case that JP Morgan is looking to acquire 3 smaller banks, which has a combined asset or revenue of 5 billion because of some regulations that prohibit it from going, let's say, bigger and better. So based on that, we felt that at this point, that segment would not really happen.
If it's global, go back. I want to see your. So this is global market penetration. You are the one that came up with this one, right? Not me. So when what you're talking about now is domestic. The limit what you're talking about now is a domestic. The growth that you're talking about now is domestic. The analysis says so. I'm
Yes,
basically using you to argue with you. So this is not my point.
Yeah.
This is global market penetration. If you have global market penetration and you're very good in acquisition, it should translate. Actually, even to the DECE, I think you came up with very cool nickname for the strategies. The DECE strategy too, because again, you can acquire many fintech. You go to India, you go to Africa, you can get a lot of fintech. And this is a company that entered commercial banking, consumer banking. They didn't start. They acquire. So my thinking is, if they want to go DEC or GMPD, they're going to acquire. So in that sense, that tendency to acquire should be on your USPM. That's my point.
Professor, it's
yeah.
just that, what I'm trying to, I understand what you're trying to say. Now, whichever strengths you have mentioned right now, whichever weakness you have mentioned right now, it's there, it is reflecting in Excel, that is for sure. And when we'll share you the Excel, you will come to know about it, that it's there. Whatever you are asking for it, it's there, Professor.
Then you did not do projections, did you? Is it on the
projections, no, Professor, we are yet to complete that because
This.
Oh, you did? Okay, let me get your Excel. Let me get your Excel.
Sure.
Let me get your Excel files.
Project, I think it's
Okay. Thank you so much. This is
Thank you,
Thank you,
Bro. If you come to further presentation, I'll see you. What I'm going to do is I'm going to give more information and details about the right now. I spoke to the